Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? I hope you're having a good day. We're recording these while we're dodging some of the hurricane-type storms that are coming around. So if you hear a little rain, it's actually not our audio today. It's going to be the storms that are barreling down on us. Hey, this is our FinTips series. We're financial advisors here at Jazz Wealth, and we just like to produce stuff to just keep teaching, right? We're teaching advisors. We do not have an office. We have a TV studio, and we use it to teach our clients. So I hope you'll check us out at jazzwealth.com. Well, hey, I'm going to help you today with your 401ks or just mutual funds in general. And I'm going to start real simple, and then I'm going to geek out for all the people. I promise you, I will teach every one of you something that you did not know already. So here we go. My good friend, new friend, Gene, actually came by and was having a hard time understanding mutual funds, and I was trying to explain, and for those of you that are beginners, mutual funds are just a basket of stocks that are prepared for the retail investor. So think of a mutual fund company as saying, hey, we are managers of a mutual fund, and we pick stocks based on a criteria, and if you want to participate, you could buy our fund. Well, we do the same here at Jazz Wealth. Actually, our portfolios and different funds are listed on our website there for you, but we do the same thing. We just let you see inside of them, and we have no expense ratios, commissions, or any hidden fees or anything like that. Well, mutual funds themselves have different objectives, and some of the objectives here, if I go over here, will be based on a set of criteria that they have, and I'll go over this in a second, but you have at least a series of them that are focused on either growth, value, index, and small cap, mid cap, and large cap. Basically, you can have a small cap growth fund, a small cap index fund, also sometimes called core. You can have a small cap value fund, and you can have the rest in mid and large cap. Now, small cap, all that really means is they pick on smaller stocks, stocks that are anywhere from like 2 to 300 million up to like 2 billion. Then over here, mid cap stocks are companies that are a little bit larger than these guys, but they're not quite the big behemoths out there. So this could be like 2 billion to 10 billion, somewhere in there. And then large caps would be like anything worth 10 billion or more. Really depends on the fund that you're looking at. Now, performance-wise, large cap growth stocks tend to perform the best over the long run. They're more volatile. I'll show you guys in a second. Mid cap growth stocks perform in line, less volatile and less performance there. Small caps tend to lag a little bit behind. That can be variable though. Index funds are basically in line with the index. They track the index, and so there's not much to do there. Value is the tough spot. Small cap value, large cap value. Small cap value tends to perform the worst. Hence the extra negatives there. But so that's just a grouping of 3 of them, 9 of them actually, in different categories. There are also other funds as well, but let's take a look, because there's 4 layers of mutual funds, and I want to kind of point out some of this here to you. So on the screen, what I did is I just put together a quick scan. All I did was try to find any scan where I could get at least 2 funds in each category. So I didn't just have one, and then I'll show you in a minute we included some ETFs. Now if you look at performance-wise, see how we've got 3 little buckets here? You've got really good performance, you've got sort of in the middle performance, and then you've got underperformance, which is not bad, it's just underperforming. These up here are going to be your large cap growth funds. So this is going to be something like the Fidelity Contra Fund, which happens to be the best performer out of this little group that I put together, and the American Funds Large Cap Growth Fund as well. In here, this is going to be your index funds. Now, you see a large difference in the performance. Remember, index doesn't mean S&P. It can mean Russell 2000. It can mean the Wilshire 3000. It could be any benchmark there, so it's not just the S&P. And then down here, what you have is the value funds, and they are very difficult to invest in. A value fund basically just means that the fund itself will invest in companies that people just don't want to invest in. They're depressed in value, they're out of favor, they're just not getting all kinds of interest at the moment. So anyways, there we go. That's the breakdown of these large cap, mid cap, and small cap funds, both growth, value, and index, so you can kind of see on the charts there. Now, like I said, there's 4 layers here to this, and if you look at a mutual fund, sorry to bounce back and forth, but if you look at mutual funds, first they're going to have their general objective. Are they a growth fund, a value fund, or an index fund? The next thing they're going to have is their focus area. They're going to focus on small caps, mid caps, large caps, or other areas as well. The third thing is their activity level. Are they going to be passive or active? Large cap growth funds could be more active because those companies are moving around a whole lot more, whereas a large cap index fund is going to be passive, meaning they're just not going to really touch it. They're going to set it up, it's going to follow the index, and that's pretty much the end of the day. They're not going to try to do any better or any worse. So those are also a little bit cheaper if you're participating in those. And then finally, the fourth thing is exposure. And this one's so important. Everybody misses out on this. They never even think to look at this. So I want to share with you some geeky stuff, if you have a second. Exposure is really important. This just means if I'm a large cap growth fund, am I 100% in large cap growth stocks? Or am I 80% in large cap growth stocks, and maybe I'm like 10% in mid cap and 10% in small cap growth stocks as well? So large cap growth funds do not have to be 100% in large cap growth stocks. In fact, almost none of them are. So let's take a look at some geeky stuff here. Don't let it scare you. I'll go through it. What I did is took all of those mutual funds and put them on a list here. I also included some of the ETFs so you could see as well. Here's the NASDAQ ETF. Here's the Russell 2000 ETF. You got the S&P ETF, just so you have it there. Small cap also for the Vanguard products. So this is basically just categorized by style. The blue, large cap growth, large cap growth, large cap growth, right? Anything growth related is blue. Anything orangish is value, and anything black is, we call it blend. It could be called blend, core, it could be called index. Those are those funds there. Now, what I want you to notice is in the previous chart, what I showed you was we talked about the Fidelity Contra Fund right here and the American Funds Growth Fund. So we're going to use those two as our example here today. If I just highlight this whole thing for you, here's a growth fund, and this is why I can always beat the performance of a 401k that a customer gives to me because we're looking at exposure. You got to look at exposure here. Check this out. So all the way to the right, we've got the 10-year annualized returns. Not bad, 15.4. And right above that, you could see that it's actually performing better than average. So that's awesome. We like to see that. Now, if you look over at their different exposure levels, notice how this fund is not all in the large cap growth exposure category. They call themselves a large cap growth fund, but only 55% of it is in the large cap growth. You've got some in the index, right? And you've got some in, this is the small cap growth. I don't know why that cut off there, but that's small cap over here. So you've got a nice mix in general. You even have some mid caps and some mid-cap growth, right? So this fund performing at that level because of their exposure. Now the Fidelity Contra Fund, if you remember on the previous screen, they beat. Their performance was better. Now to be fair, the American Funds is a front-loaded fund, so you're paying more in expenses there. But even if we take that out, the Fidelity Contra Fund beats the performance of the American Funds that growth fund that's listed there. Why is that? Well, now if we do a quick exposure analysis here, we could see they have more in large cap growth. Remember on this chart over here, I said large cap growth stocks tend to perform better. So if you're going to be a large cap growth fund, you better have a lot of your money in that large cap growth exposure, which the Fidelity Contra Fund currently does, right? So they've got more in their large cap growth, they've got more in the index, and they've got less in the large cap value or the struggling kind of areas there. And because of that, their performance is just a little bit better, almost 1%, right? Or just over 1%. So that's important because that's 1% or 1.1%. So if you think about it, if I have a customer here that says, I've got a 401k, I need help with that as well. If I'm able to improve by just 1%, I mean, that could be huge. Your 401k is a large investment, right? So just a quick analysis, something I wanted to share with you. I also put at the bottom, by the way, if you're interested, all the other small caps, different ones that are pretty popular in there if you want to take a look at it. T. Rowe Price, a popular mid-cap growth stock fund. Just so if you're looking and you look in your 401k and you say, wow, I have that, right? Let's see what they're exposed to. This is one of the sort of analytics that I like to use to help customers improve on performance. The volatility, by the way, which you know I'm real picky on, of the Fidelity Contra Fund and the American Funds is almost identical. Right? You wouldn't think so because they have more in the large cap growth, but it's almost identical. So you're if I were to make this suggestion, you're swapping this out for something that's going to perform better, but it's not going to wiggle around a whole lot more than the fund that you already have. And down at the bottom, I put small, mid, and large cap just so you could see that there. Anyways, that was just sort of a brief overview to start very basic, go all the way into the geeky stuff, I hope that helps you out there. Here comes the rain, so we're going to wrap it up there. We'll be back on the closing beat later to talk about the stock market, how things perform for the day. I hope you'll join us there. If I helped you in some way, hit the subscribe button. I do appreciate it. Tell your friends to hit the subscribe button as well. That's always impressive to me. I love that you guys are out there watching. I thank you for your support, and we will talk to you soon.